Hello, everyone. Good morning. Thank you very much for joining today's session. Before we start, I just wanted to inform you that we are recording the session, and both the presentations and the recordings will be available on IHI's website. Also, the IHI Call 3 has been launched today. Here is the link to the Call 3 documents. On the navigation menu of the B2Match platform, you also find the link to the same page if you want to access this information. So today's session will be focused on the financial part of the project proposals and will be presented by my colleague Gael. We are also in the room with my colleagues Desmond and Alessio if you have any questions. Thank you very much.
Thank you, Ri. Welcome everyone to this webinar on the financial part of single stage call proposals and more specifically for call 3 proposals. So today during this webinar, I will go through the different elements of the budget table. I will explain also the key thresholds that you need to pay attention to. I'll explain the different types of industry contributions, so the contributions coming from private members and contributing partners, namely ICOP, financial contributions, and IKAA. I'll present you also our new budget tool to help you preparing your budget. I'll give one concrete example also of a budget table, and I will explain you the different steps I follow to build that budget table. And then we will still have some time for questions and answers. So let's start. This is a screenshot of the budget table for call 3, how it will look like in the proposal submission environment. And so I took the different columns and I've put some colors to make the clear distinction between the 3 categories. So the budget table can be split, as I said, in 3 parts. The first part relates to the estimated eligible costs. The second part relates to the EU contribution and the other sources of financing. And those 2 parts are applicable for all types of participants in your consortium. And then the third part relates to the IHI specificities, namely ICOP and non-EU ICOP, which is specific for private members and contributing partners, and then also IKAA, which is only for private members. So I'll start with this first part of the budget table, the estimated eligible costs. So if you take your project eligible costs, they can be actually incurred by different types of entities. First of all, the entities that are requesting funding only, like SMEs or universities, hospitals, patient organization, and so on. So those entities will have their costs reimbursed, and their costs will be covered by public funds, mainly so with the cash we receive from the European Commission. Your project eligible costs, they can also be incurred by entities that are not requesting funding, but that are contributing only in kind. So we say ICOP to the project and or cash to the project. And those entities are private members or contributing partners. And so their costs are not reimbursed and are covered by private funds, since they are incurred by private members and contributing partners. And here underneath, you have the logo of the 5 industry associations that we consider as our private members. And then your project eligible costs, they can also be incurred by entities that we call hybrid participants. Hybrid because they can both contribute ICOP and or cash to the project, but they can also request funding. And so those entities are also private members and contributing partners. So you have 3 types of participants, and you see that for each project, you have the costs that are covered by both public and private funds. So you have this co-funding principle that is the specificity of a public-private partnership, which is IHI. And then you also have IKAA, which is which are non-project eligible costs. That's why I've put them a bit aside. And those additional costs for additional activities, they can be provided only by private members, but I will come to this a bit later on. I will first focus on the project eligible costs. And here are the different types of cost categories you can have. So personnel, subcontracting, purchase cost, and so on. What is important here is that all your costs fulfill the cost eligibility criteria. So your costs, they need to be real, so not estimated. They need to be recorded in the accounts. They need to be foreseen in the budget of the proposal, and they have to be incurred during the project implementation. So there is a list of different cost eligibility criteria. It is in the Article 6 of the Model Grant Agreement, so I really recommend you to have a look at those criteria, because it's very important, because only the costs that are eligible, they can be reimbursed or they can be considered as ICOP. So I'll start with the first category of type of cost, which is personnel cost. So in this category, you can have cost for your employees. You can have cost for natural persons that are working under a direct contract, which is other than an employment contract, like, for instance, your in-house consultants. You could also have, in this category, cost for seconded personnel. So that's when you have a person that is employed and paid by a third party external to the project, but put at the disposal of the beneficiary against some payment or for free. And you can also have in this category cost for SME owners or natural persons that are not receiving a salary. And if I take the most common case, so the cost for employees, you have here two options. Either you use actual costs following the Horizon Europe formula, which is the following. So to calculate the personal cost for one person, you need to multiply the daily rate for that person by the amount of days worked on the action, and with a maximum of 215 days per year for a full-time equivalent. So of course you need to calculate the pro rata if the person is working like full-time or part-time, for instance. And the daily rate, you get it by dividing the actual annual personal cost for that person by 215 days. So that's the standard formula in case you use actual cost, but you can also use average personal costs in case it's your usual cost accounting practices to proceed this way. And here I put you the link of a very useful EC presentation actually on the different calculation methods for personal costs. It gives concrete examples, and because it's not always that easy to calculate personal costs, so I really recommend you to have a look at this presentation because it gives some hints and steps to follow to calculate your personal cost. So the second category are the subcontracting costs. So that's when you have a third party that carries out some work on project tasks for the beneficiary. So for this, you need to have clearly a contract between the beneficiary and the subcontractor. And the beneficiary who is selecting the subcontractor really needs to do this selection following its usual practice, ensuring also the best value for money or the lowest price if it's appropriate, and ensure that this selection is made in a transparent way and with no conflict of interest. And last point on the subcontracting, it's not allowed to have subcontracting between beneficiaries of a same project. Next slide. Sorry, it's not working. Thank you. So purchase costs, that's when you have in this category travel or accommodation or subsistence costs. You can also have cost for equipment. So in this case, you need to consider only the depreciation cost of the equipment, and you need to calculate this following your usual practice again. and you also need to only consider the part of the equipment that has been used for the project. You can also have other goods, works, or services if it's necessary to implement the project. And well, in this case, it's quite limited in scope usually, so it's not to work on project tasks. In case it is to implement some project tasks, then it will be more considered as subcontracting cost. Internally invoiced goods and services. So those are goods or services that the beneficiary itself produces or provides to be directly used for the action. It is, for instance, self-produced consumables or specific devices or facilities that the beneficiary has and provides to be directly used for the project. And so for this cost category, it needs to be calculated as unit cost following the beneficiary's usual cost accounting practices. The indirect cost, so that's a fixed flat rate that is calculated as 25% of the direct eligible costs, excluding subcontracting cost and internally invoiced goods and services in case you have any. So it's calculated automatically by the tool and for all beneficiaries without exception. So also for the companies providing ICOP, so private members and or contributing partners. And here it's important to make sure that there is no indirect cost that is included in the other cost categories, because otherwise there would be a double counting of those indirect costs. So for instance, if you have a company that uses average personnel cost and whose usual practice is to calculate average rate for its personnel that includes indirect cost, well, that company will need to recalculate that rate to make sure that the indirect costs are excluded from that rate. So that's it for the first part of the budget table. I move now to the second part of the budget table, which relates to the EU contribution and other sources of financing. So here, the purpose of this of those columns is to answer the following questions. How are the participants' costs covered? Basically, are they reimbursed by IHI, so with EU contribution? Are they covered with the beneficiary's own resources? Or are they covered by a financial contribution received other than the one received from IHI? So you can have different scenarios. It can be only one source of financing. It can be a combination of several ones. It can be none also. For instance, if a private member wants to provide only ICOP, then there will be no other sources of financing. So I'll start with the first one, the EU contribution. So the funding rate is always 100%. It's automatically calculated by the tool, and even for the entities that are not eligible for funding. So pay attention to this. The maximum EU contribution is the funding rate multiplied by the total eligible cost. So it's also automatic. And in the column requested EU contribution, that's where you need to enter manually the amount of EU funding that you request to reimburse your project eligible cost. And actually the 100% funding rate, it gives a bit the wrong impression that all the participants can get all their costs reimbursed, but it's actually not the case. Why? Because simply IHI projects have private members and contributing partners, and those ones should bring at least 45% of contribution to the project. So ultimately, they cannot request full reimbursement of their costs. Otherwise, they would not be contributing any ICOP to the project. And the other reason is because we have participants that are not eligible for funding. So they still can participate to the project, but they cannot receive funding. For instance, entities in the US or in Switzerland and so on. So no, as a conclusion, not all participants can get all their costs reimbursed. And here it's a simple budget example to show you a bit what we expect to receive for a single stage call proposals. So as you know, in single stage call, any entity that is established in a member state or in an associated country to Horizon Europe or in a low and middle income country can receive funding. And if it's not the case, it is actually still possible to get exceptional funding in case the external experts consider that the entity is essential for the implementation of the project. So those are a bit the conditions to get funding. And so if I come back to this example, this is what we expect to receive more or less for single stage call proposals. So we would have 3 types of participants. Beneficiaries requesting funding only, like for the SMEs or the hospitals, universities, and so on. You see that they request 15 million, which is the totality of their total eligible costs. Then we would have private members and or contributing partners who would be contributing fully in terms of ICOP or financial contribution and so on, and they would be requesting 0 funding. And then we would have some hybrid participants that would be both contributing in terms of ICOP and but also requesting funding. And you see that in the end you have like a balance between the public funds and the private funds. Here it's 50%, but well, the minimal limitation, the minimum contribution should be 45%, as you know. I'll come back to this later on. So for 2-stage call, well, it's not really since this webinar is for call 3, which is a single stage call, it's maybe less relevant, but still for your information, 2-stage call is a bit less open. Some entities are not eligible for receiving funding. It's, for instance, the case of the pre-identified private members and contributing partners, or it's also the case of larger companies that have an annual turnover of more than 500 million. So for 2-stage call, we would expect to have more this scenario here, like beneficiaries requesting full funding on one hand, and then the pre-identified private members and or contributing partners contributing fully the cost. And we would have there, again, the 50-50 balance. Again, also for calls, for 2-stage call, the minimum limitation is 45%, but just for the simplification of those examples, we took 50%. So as a conclusion regarding the EU contribution, so you may have participants that are eligible for funding. There may be beneficiaries requesting the full reimbursement of their costs, like it could be the case for some SMEs, for instance, or for some hospitals. It could be also some hybrid participants. So those when they can request funding, but they need also to keep in mind that they have to contribute collectively with the other private members and or contributing partners of the consortium. They have to contribute 45% at least of contribution to the project eligible cost. And so they have to keep this in mind, and they have to keep in mind as well that the more they request funding, the less there is the funding available for the other participants. And then in case you have participants that are not eligible for funding, then for those ones, you need to make sure that you do not request any EU contribution in the table, since the table actually allows you to put some requested contribution even if they're not eligible for funding. So in the end, who gets what part of funding? That's really something to be discussed internally and to be agreed among the different participants of your proposal. Just one parenthesis here regarding the eligibility for funding regarding UK participants. So at proposal stage, we consider UK participants as eligible for funding because UK is considered in a way as a Horizon Europe associated country, even though the agreement is still ongoing. But still, UK participants can request funding in the proposal. And then in case the proposal is successful, at the moment of the grant agreement preparation, in case if the UK has become eventually officially an associated country to Horizon Europe, then well the UK participants will still be able to request funding, obviously, but in case UK does not become an associated country to Horizon Europe, in that case, the UK government will cover the costs that were initially requested. So I think that's really important to pay attention to this, that the UK government offers this guarantee. And then Swiss participants, those ones are officially not associated country to Horizon Europe, so they are not eligible to request funding, whether it is at proposal stage or later on. So to come back to how the cost can be covered, so we've just discussed about EU contribution, but the cost, they can also be covered by financial contribution, which is another financial contribution than the one received from the EU. So the financial contribution, they can be paid by private members or by contributing partners or any other entity from inside or from outside the consortium. But the idea of that financial contribution is to cover the cost of that are incurred to implement the project of another entity. And any participant can receive such financial contribution. And in case in your proposal you do have financial contributions, well, they need to be explained in the part B of the proposal. There is a specific table in which you need to specify who is paying the financial contribution, what's the amount, who receives it, and for what are the concerned project activities to be carried out with that financial contribution received. And then another option is to have your cost covered with your own resources. But that's basically when the costs have not been reimbursed either by EU contribution or by financial contribution or by both. This is actually when the beneficiary covers itself, its own costs, and those costs are not reimbursed. And so this column is always 0 for the private members and the contributing partners, because their own resources is actually equal to their ICOP. And here you can see a simple example of the different sources of financing for a beneficiary requesting funding only. So you would have 20 million of total eligible costs. 10 million would be funded by IHI with the EU requested contribution. 5 million would be covered by a financial contribution, maybe received by a private member. And then the 5 other million left would be covered by the own resources of the beneficiaries themselves. So what is important here with this table is to show you that you need to make sure that all your costs, so in blue here, are covered in a way by the columns in green. So all costs need to be covered, and but you also need to make sure that there is no profit, so that you don't have more. You don't have received more contribution than your actually than your cost, basically. So that's why you need to make sure that your total eligible cost is equal to the sum of the different sources of financing. And here we are already now at the third part of the budget table, which relates to the IHI specificities. ICOP, non-EU ICOP, and then IKAA. So those categories are for private members and contributing partners only. So who do we mean by private members? So we mean actually the 4 industry trade associations that are also members of IHI. So there is FPIA, which also includes Vaccines Europe, MedTech Europe, Europa Bio, and COSIR. So we mean those 4 associations, but we mean also the members of these associations. We call them the constituent entities. And we also refer to the affiliated entities of those ones, so of the affiliated entities of the associations and of the members of those associations. And affiliated entity mean that there is a capital or a legal link. So when we refer to private member, we mean actually all those entities, not only the associations, but as I said, also the members of those associations and the affiliated entities of those associations or members of those associations. And what we mean by contributing partners, we mean, well, it can be actually any organization that wants to contribute to the IHI objectives, but who does not want to become a full member. So to become a contributing partner, you need to apply with an application letter that you need to send to IHI office prior to the proposal submission deadline. And in that letter, you need to commit a certain contribution to a particular call and topic. And this needs to be approved also by the IHI governing board. And well, if you have questions on how to become a contributing partner, you can check this on our website. So here are the different types of contributions that can be brought by private members and contributing partners. So you have ICOP, which stands for in-kind contribution to operational activities. We have financial contributions that we just explained, and IKAA, in-kind contribution to additional activities. I will come back to this, to each of the contributions specifically. But as you can see on this table, the private members, they can contribute all types of contributions, while the contributing partners, they can only contribute ICOP and financial contribution and not IKAA. And before I start explaining each single type of contribution, I will present you the key threshold that you are already aware of, but which is quite interesting, which is the minimum 45% industry contribution. So as you know, in our regulation, it is mentioned that private members, the constituent or affiliated entities, and contributing partners, they must contribute at least 45% of the action's eligible cost and additional activities. So we translated this into the formula that you can see here. ICOP plus FC plus IKAA should be higher or equal than 45% of the action's eligible cost plus IKAA. And so if the threshold is not reached collectively, it's an issue because the proposal is considered not eligible and will therefore be not evaluated. So we've developed a tool at IHI to help you verifying if your proposal reaches the 45% quite easily. I will show you that tool a bit later on. But so you know, we tried to develop something to help you understanding and finding out if you reach this threshold quite easily. So since that threshold is quite important, since it defines actually if a proposal is eligible or not, the coordinator of a proposal must submit a declaration which is annexed to the proposal to actually confirm that the required 45% contribution will be provided. And so for your information, that 45% contribution, it can be reached with only one type of contribution, with a combination of some of them. As I said, it's only for private members and contributing partners. So if you're an SME and you're not a private member, for instance, you cannot contribute to that 45% contribution. And at the gap stage, so when, in case your proposal is successful and you reach the grant agreement preparation phase, at that moment, IHI will check actually if the private members are indeed members and if the contributing partners have been approved by the IHI governing board. Another important point is the fact that the 45% should actually be maintained during the whole project implementation. And so that's why IHI would actually recommend to try to aim for 50% instead of 45, just in case you have during the project implementation, one of the private member having a decrease of ICOP, for instance, that would impact the 45%, and at least you have no issue. So as a prudent approach, IHI would recommend aiming at 50% instead of 45%. But even though the 45% remains the formal limitation, of course. So I'll explain now what ICOP is. So ICOP are the eligible costs in implementing the action minus the requested EU contribution by by private members and by contributing partners only. And the companies who are providing ICOP, they are subject to exactly the same rules and the same obligation as any other beneficiary who will be signing the grant agreement. So they have the same eligibility criteria that we've discussed earlier. They have the same cost types that are allowed that we've discussed earlier as well. They have the same rules for reporting and so on. And in the budget table, ICOP needs to be calculated manually, so it's not automatic. But don't worry, we have that tool, as I said, that will help you doing that. And also in the budget table, the column ICOP includes actually both EU and non-EU ICOP. I will explain you what non-EU and EU ICOP mean. But to give you an example here of what you could have in the budget, imagine you have like a private member that is a hybrid participant, so requesting some funding. If out of the 15 million, 5 million are covered by EU contribution, ultimately ICOP would be equal to 10 million, since ICOP is equal to the total eligible cost minus the requested EU contribution. And then out of those 10 million, 2 million would be from non-EU ICOP, but the 2 million are included in the 10 million. So what do we mean by non-EU ICOP? We mean actually the ICOP that is incurred in third countries outside the EU or outside one of the associated countries of Horizon Europe. So outside basically the 27 countries from the European Union, and also outside from the 15 associated countries, which are listed here. And well, as you can see here on this slide, as I said earlier, for United Kingdom, as well for Morocco, the agreement to become an associated country is still ongoing. And so in case you have some ICOP that is incurred in the US or in Switzerland or in the UK, it will need to be considered as non-EU ICOP. And if by the time of the grant agreement, UK has become formally an associated country to Horizon Europe, then the ICOP will be considered as EU ICOP. And the criteria we use to identify if it's EU or non-EU ICOP, it's actually where the activity is carried out. So we do not take into account where the company is established, but we take into account where the activity is carried out. So you may have, for instance, a company that is based in the US, but who carries out activities in Germany, then its ICOP will be considered as EU ICOP, and the other way around. So there is a threshold regarding non-EU ICOP, but at program level, so for all projects of the whole program together, which is 20%. But there is no limitation at project level. Well, the limit for country is set at 100%. So basically there is no limitation, but still in case you reach more than 20% of non-EU ICOP, we recommend the private members to contact the association offices to make sure that at program level the monitoring can be made in a proper way. So I move on now with financial contributions. So they can be paid to the idea of the financial contribution is this, that it covers costs to implement the project of any other participant, and but it can count as part of the 45% threshold only if it is paid by a private member or by a contributing partner, and only if the recipient of that financial contribution is eligible for funding. So those are the two key conditions. And note also that in the budget of your proposal, so in part A, there is actually no column financial contribution paid to be filled in by the private member or by the contributing partner that is paying the financial contribution. So this needs to be specified in the part B, as we discussed earlier on slide 22. And I wanted to show you also a special case of financial contribution. So you may have actually private members or contributing partners that are paying a financial contribution to another private member or contributing partner. It could count for the 45% in case the one receiving the financial contribution is eligible for funding. But in that case, it's important that the one receiving the financial contribution decrease its ICOP by the amount of the financial contribution received. Otherwise, there would be a double counting. So that's key. And but in case the private member or the contributing partner receives a financial contribution from another entity that is not a private member or contributing partner, then it would not impact its ICOP. IKAA. So how to consider, what are the different criteria that needs to be fulfilled to have an additional activity to be considered as such? So there are different conditions and they all need to be fulfilled. So first of all, the additional activity should contribute toward the achievement of objectives of the IHI project, or toward the dissemination, the sustainability, or the exploitation of the IHI project results. Secondly, it should not be funded by IHI or any other union funding program. Thirdly, it should be carried out in the union or in one of the associated countries, so it cannot be non-EU. Fourth, it should be described in the annex on IKAA, which is an annex of the proposal. And fifth, it should not be project tasks, because otherwise it would be considered as ICOP, and we need to avoid double counting here. So those are the 5 key conditions to be fulfilled and so to have additional activities. It's only for private members also, so contributing partner cannot contribute IKAA, and there is a limitation at program level of 40%, but it's only at program level. Again, there is no limitation at project level. So in case you exceed 40% of IKAA in your proposal, it's not an issue, but it's just we advise the private members, the one concerned, to inform their association offices so that they can make sure that the monitoring can be done at program level in a proper way. So now some differences between IKAA in your proposal and ICOP. So ICOP are eligible costs in implementing the project tasks as it is described in the description of the action, while IKAA are costs for additional activities that are not project tasks. So that I would say that's the main difference. And it's really up to the consortium to identify what is ICOP and what is IKAA for their respective project. Another difference is the fact that ICOP are eligible costs, so the cost can be reimbursed by IHI, of course, if the entity is eligible for funding, while IKAA are non-eligible costs, so they cannot be reimbursed by IHI. And a third difference is the fact that ICOP is subject to the rules of Horizon Europe, just like any other beneficiary signing the grant agreement, while IKAA, it's a bit different. It can be valued following the usual cost accounting practices of the company. They are not subject to the same rules. For instance, for the reporting, it's on a fixed date every year. So it's really different actually than for ICOP. And another difference here is regarding the eligibility timeframe. ICOP, the cost can be incurred during the project, well, must incur during the project implementation, so between the start date and the end date of the project, while for IKAA, the cost can already incur from the date of the proposal submission and up to 2 years after the project ended. So you can see this on the graph. The line in green goes way beyond the line in orange. And to give you a concrete example, a bit long, but I mean, sometimes it's necessary. So in case your project objectives are to integrate diagnostic and predictive approaches to support multimodality cancer care, you could have, as ICOP, some project tasks like developing integrated solutions collaboratively in the consortium, and then get feedback from end users to further improve the multimodality cancer care. So that could be ICOP project tasks. And what could be potentially additional activities? So as I said, it can already start before the project starts. In that case, it could be, for instance, cost for developing an image-guided radiation therapy device, and that device would be used for the consortium activities, and as a result would contribute to achieving the project objectives. So that would match with the criteria of an additional activity. Or potentially during the project implementation, for IKAA, you could have cost for generating data from clinical trials using cancer treatments modalities, but other than those of the project. And then these data would further contribute to verifying the usability of the integrated approach developed by the project, and would help its fine-tuning. But in that case, the project activities would not depend on this specific data set. It should not be essential for the success of the project. Huh? And after project end, what you could have as potential IKAA, you could have cost for developing a decision-making software tool that enables easier communication in the cancer care continuum and between stakeholders. And as this tool would contribute to the deployment or the exploitation of the project outputs. So those are 3 examples, but you have actually many more in the draft IKAA guidelines that I invite you to read, to have more insight of what could be considered as IKAA. So I'll present you now our budget tool. So the tool makes actually calculation automatically, so you don't need to bother, for instance, calculating ICOP. It's automatically done. Also, it does not allow values to be entered in cells when it should not be applicable. For instance, contributing partner are not able to enter IKAA. Also, figures become red when there is something wrong. So, for instance, regarding what we discussed about the sources of financing, in case the tool detects some profits, then the requested EU contribution would become red. And so that you can correct it and make sure there is that all costs are covered, but that there is no profit. And the tool also calculates for you the different thresholds for your proposal. So IHI basically really recommends you to use that tool to test different budget scenarios, to play a bit with the different figures and see when you reach the 45% eligibility threshold, and also to ensure that your budget is completed correctly, because you may make mistakes that actually impact directly the calculation of the 45%. So it's really important to make sure that your budget is correctly completed. But please do not submit this document to IHI as part of your proposal. It's a tool. It's just to be kept internally. It's for you, but we don't need to receive it. Your proposal for your proposal, only the budget in part A will be considered. So that tool, it's basically an Excel document with 4 tabs. The first tabs contain some instructions on how to fill in that, on how to use that tool, basically. It also gives some definition of the different types of participants, which I think is really important to read and read again to make sure you understand well what is a private member, what is a contributing partner, and well, the differences and so on. So please always start reading this instruction tab. And then the second tab is gives you actually a simplified budget overview. I'll show you. I will show it to you in a second. The third tab gives a more detailed budget overview. And then the last tab is to check the results of your detailed budget overview. So you can find that tool on IHI website, but it's also part of the proposal zip package that you can download from the submission environment. And this is how it looks like. So that's the simplified budget tab. It does not contain all the cost categories. So that's why there are less columns than in the real budget table. It only contains the main ones. It contains only 3 rows also, so just 1 row per type of participant. And the idea here is to help you testing different budget scenarios. You need to insert values only in the cells in blue. The one in yellow are calculated automatically. So you see that ICOP, for instance, is calculated automatically. And the cells in gray are not applicable. So for instance, you see that ICOP is not applicable for a beneficiary requesting funding only. Obviously, because that beneficiary is by default not a private member and not a contributing partner, so it does not qualify for providing ICOP. So the idea here, it's really optional. Huh? You can use that tool to test different scenarios, and the idea is to see immediately. So on the same tab, you can see directly the results from the different values you have entered in your budget. So directly you can see if you reach the 45% threshold or not. You see in this case it's red, so the result is negative. Your proposal is not eligible, but it can also be orange. In case it's orange, it's when you reach a percentage between 45% and 49%. So it's good. Your proposal is eligible. But if you want to approach a prudent, if you want to adopt a more prudent approach, you still can increase if you want your ICOP, your financial contribution, and your IKAA in order to reach 50%. And then in case you reach 50%, it appears in green. And then there are other checks that you can directly see from the tables you have entered in the budget. But those checks are less important since they do not influence the eligibility of your proposal. But still, it's interesting. So it gives you get an idea of the IKAA threshold, where you stand compared to the 40% limitation. Same for the non-EU, where do you stand with the 20% limitation? And it also shows you if you have a balance between the financial contribution paid and the financial contribution received. So that's what you can see directly from the simplified budget overview. Then you also have the option to directly fill in all the values in the detailed budget tab. This one is bigger because it contains all cost categories, and it also contains one line for each participant of your consortium. So it's basically your budget table. But it's very useful, we believe, to help you verifying if your budget is completed correctly. Because again, some cells are not applicable, some cells are calculated automatically, and so also some cells become red when it's not correct. So we really recommend you to use that tool, and specifically that detailed budget tab, before you insert your budget in the submission tool, just to make sure that you don't have any mistakes in your budget table that could actually potentially influence the calculation of the 45%. So you need always to start indeed by selecting the type of participant. So that's why it's important to first read the instructions tab, which defines again the different types of participants. So you are sure you understand well what are the different types of participants. So first you need to select the participant type, and then only after that you will be able to insert values in each of the columns. And then once this table is filled in, you can check the results in the check results tab to see if you reach the threshold. So again, I just go back to show you this. This is what you can see, the check for the 45% and the other checks below. Then one concrete example. Imagine you have 10 million as EU funds available for a targeted topic. Then you need to match that 10 million by private members and contributing partners' contributions. Well, here for the example, we consider 50%. But this is the prudent approach. Again, 45% is the formal minimum. But let's see how you can build your budget based on this. So the first step would be to calculate the contribution from the different private members and contributing partners from your proposal. So you know that 10 million, that you will need to reach 10 million, more or less, with the total ICOP plus financial contribution plus IKAA. And so this is what you could get. For instance, you have here 4 types of private members and contributing partners. Some are contributing only ICOP and financial contribution. Others are hybrid, so they're also requesting funding. You see that they contribute 10 million, but they also request 4 million. And then the second step would be to calculate the remaining funding available for the other beneficiaries, the ones that are requesting funding only. So if you take the 10 million that are contributed by the industry and you deduct the 4 million that have been requested as EU contribution, you get the 6 million, which is the EU funding left available. And then based on what is left available as EU funding, you can bring on board the other beneficiaries, which are here in green. And so you can see that those 3 companies are requesting 6 million, which does not exceed what is the minimum EU funding left available. And you can see also that they get their cost covered not only by EU contribution, but also by financial contribution. For instance, the large company Y here has 3 million total costs and 1 million and a half covered by EU contribution. So this means that there would be also 1 million and a half as own contribution. And so this is a scenario, and you see you have the balance between the EU contribution and the total industry contribution. So now if you insert those elements into the budget tool, I've done it here, what do you get? You get that that you reach 46.51%, which is good. So your proposal is eligible. And but however, if you want to adopt this prudent approach, you still can increase a little bit your industry contribution in order to secure 50%. But otherwise, it's already good. Of course, you are above the 45%. So another step could be to test other budget scenarios with the budget tool, and potentially you could try to decrease the industry requested EU contribution so that automatically the ICOP will increase. Or you could also add a new financial contribution or increase the one that you have already. You could increase IKAA, or you can make a combination of those different elements. Using the budget tool. And so here, for instance, I just decreased the requested EU contribution from the private members. So automatically it increased the ICOP and the total industry contribution. And so automatically I can see that my result appears now in green, since I reach more than even more than 50% of industry contribution. Well, that's it. I put for you here a list of useful documents as well. The usual ones, the model grant agreement and the annotated model grant agreement, which are always useful, especially the second one that contains many annotations and examples. The frequently asked questions for IHI calls that we regularly update with questions we receive often. And the guide for applicant, which is a bit the Bible for any new applicant to IHI calls. Then the draft IKAA guidelines, which is still in draft, but still contains a lot of information. And as I said, you can go to that guidelines and check the different examples. And then the IHI budget tool. Thank you.
Great. Thank you very much, Gail, for your presentation. And now we'll go to the questions and answers part of this session. Before we start with the questions and answers, I just wanted to remind you that the IHI Call 3 documents have been published on our website, and also on the top menu there's a link to this document. So from the this platform that you logged in, there's a tab called Call 3 Documents, and if you click there, you'll access. Please read carefully the text, the topic text, because they might have changed since it was published from the draft. So, Gael, we just start with the first questions. It's we have a few questions from the UK specifically. So you already mentioned that during your presentation that there are some conditions for UK partners to apply. But I would like to ask you specifically about UK subcontractors and if they are eligible for funding.
Yeah, so it's the same approach for UK participants and UK subcontractors. So indeed, at the proposal stage, they are eligible for funding. And then depending on the situation at the grant agreement preparation phase, depending if UK has become officially a private, an associated country to Horizon Europe or not, it will be covered by IHI funding or by the UK government. Do you want to reply to a UK subcontractor?
So just continue with the next question.
Next one, yeah, go.
So, but even if the UK can get funding from a UK UK partner cannot become a coordinator, right?
So, I mean, this gets linked to the actual funding question. So, if you have a UK participant who is basically is participating but receiving funding from the UK government, there, then by definition, and under the actual legal basis due to the rules of financial accountability, then you cannot actually have a UK coordinator. If, however, of course, this association agreement is put in place and the UK does become an associated country, then it is a viable option. But if this would go to all UK participants, if they're essentially self-funding via the UK government, then no, they shouldn't be functioning as a coordinator. And this is something we would be looking for.
Yeah.
So
Switzerland.
And also regarding Switzerland, is Switzerland excluded completely, or they are receiving funding from the?
I mean, I think that's the distinction that Gail referred to earlier on. We've covered extensively in the rules and procedures webinars, which I don't think. Let's say that Swiss participants are, of course, hugely welcome to participate, but because Switzerland isn't actually signing an association agreement with the EU, we can't actually fund them, and this is a clear delineation at this stage. However, as I understand it, the Swiss government is very, very good at funding Swiss participants, so there won't be a difficulty there. So they're welcome to participate, but they'll be essentially bringing their own resources. I think is the best way to look at it.
So, and can private partners fund the project? For example, if they come from ineligible countries like Canada and US?
Yeah, that's so we have a couple of mechanisms there, but I mean, Gail's also referred to this in her slides, and again, we covered it in the rules and procedures yesterday. So if you're coming from what we call a third country, and I think the US and Canada are the best examples of this, and you want to contribute to the project, then the best approach here is what's called our contributing partner mechanism, whereby someone basically applies to the IHI office. There's full details on the IHI website. There's template letters as well. And essentially how we envision this working is the US entity basically applying to become a contributing partner. They're approved by the governing board, and then they would become a beneficiary in the actual project with full access rights and all the other privileges that the beneficiaries get. And in certain circumstances as well, I'm thinking of the single stage calls, then potentially these these contributing partners can actually have quite an important role in the project.
Great. We also have a few questions about affiliates. So can affiliates be considered as different consortium partners? For example, the SME headquarters is in the Netherlands as a hybrid partner and Swiss affiliate as a beneficiary requesting full funding?
Well, the Swiss. Okay, so there's a couple of different issues here. I mean, so the rule as I said, the Swiss beneficiary isn't actually going to be able to request funding. This is clear.
Yeah.
Because they're actually coming from Switzerland. They could, of course, contribute in kind. Because they would be part of a private member, if that's what we're talking about when we say private. So I think the best we can say is it's envisaged that a lot of the private members will basically have affiliated entities scattered across, the EU countries and even exterior to the EU. And the rules are there to allow these entities to either participate in the actual project or to request funding or in various different ways. So I think the short answer to the question is, firstly, yes. So what you would primarily have is maybe in this construction, if the SME headquarters was actually bringing something to the project, they would be the primary beneficiary. And then if there was another part of the actual company who wanted to contribute, then they would come in as an affiliated entity. I think that's plausible. But the second part in relation to the Swiss, even if you're coming in from Switzerland, you're linked to someone else, you still have the restriction on funding.
Great. Thank you very much, Desmond. And still,
Wait, 1 second here. This is Polybios. In case, for example, we're not talking about private members here, it's important for the applicants to understand that the Swiss will be an associated partner in the consortium, meaning that they don't sign the grant agreement. So it will be subject of the consortium how to build this association with countries that are not participating as members. So in what Desmond said about the Swiss, if it's a private member, it's one case. If it's not a private member and it's just a normal entity that will participate in the consortium without receiving funding because it's funded by the Swiss government, then it should be an associated partner. But having an associated partner, it doesn't sign the grant agreement. So the affiliate, that is the Netherlands, should be participating differently. So
Great.
you see the concept here, Desmond, no?
Yeah, no, I think that gives more. I think that gives them more flexibility depending upon the nature, whether, as you say, whether it's a private member. I mean, we were reading it here as a private member, but yes, if you basically have someone who's completely disconnected and it's a Swiss entity, then the associated partner route is open as well. The associated partner, of course, doesn't, the best way to put it, doesn't have quite the same status as the affiliated entity, but it's definitely an option.
Great. Thank you very much, Desmond and Polybios. We have another question regarding the affiliates. So if a private member has affiliates in a number of countries across Europe, how does that work for the project submission and budget? Do all those affiliates have to separately list their contributions, or can the project submission and budget be captured under one organization?
Yes, so I think we kind of touched on this a moment ago. If you basically have a private member, the current construction we have is that if you have a private member with multiple affiliates, the point is, and it's presumed that they're actually going to be contributing, then we would have a primary part of the corporate group who would be the main beneficiary, and then we would bring everyone else in with a legal link to that beneficiary as affiliated entities. And those affiliated entities would then be identified in the actual grant agreement. They would submit a declaration of honor. They'd have a PIC, but they wouldn't sign the grant agreement, and they wouldn't become full beneficiaries, but they'd be identified in the grant agreement under the main beneficiary. And they would then have access to Annex 2, which, as we know, is the budget and the financial details, and any contributions they make would be recorded via Annex 2.
Thank you, Desmond. And with regards to the private members, is there a complete list of the private members?
So, well, if we're talking about, so thank you for the question. I think that's a good question, because there's a bit of we're still working on getting the information out in relation to the specific language we're talking about. So strictly speaking, IHI only has 4 private members, which is the trade association. So it's FP, COSIR, MedTech, and Europa Bio. They're the 4. So if we talk about, for example, a medical technology company, they will be what's called in the legal basis a constituent entity, and I think Gail referred to those a bit earlier on, of the private member. So because these trade associations are by their nature very, very large, IHI doesn't have a list of who is and who isn't a member of COSIR or MedTech or FPA, for instance. But what we say in these situations, and we've addressed this in the FAQs, which are published, and the answers we've received in relation to calls 1 and 2 so far, is we basically say, if you are in doubt, contract the requisite trade association and say, look, this is our connection to you, and then you'll be clearly identified as either a constituent or affiliated entity, and then your status is clear. But just to reiterate, in terms of the private members, IHI only has 4 private members. And, you know, they're clear and clearly identified, and contributing partners, who we've touched on a couple of times, they're something separate. So they're not regarded as private members with everyone else.
That's great. Thank you very much, Desmond. Our next question is it advisable that the proposal be for a maximum amount offered in the call, or it can be less? And also linked to this, will evaluators assess the budget at all?
So I will reply to this question. I'm Alessio, the co-coordinator. So in each topic, there is a topic budget. There is also a suggestion for an indicative budget for the proposal. So it's really up to the consortium to basically propose a proposal of a certain budget. So the maximum amount depends a bit on how much do you want to propose in terms of the budget for that particular proposal. So there is no right or wrong answer if it's better to do the maximum amount or less. About the evaluators, yes, the evaluators assess the budget of the proposals directly in the implementation criterion. So I invite every interested applicant to have a look at the proposal template, and actually what you see in the proposal template will be basically assessed by the evaluators, including the budget.
That's great. Thank you very much, Alessio.
Louis, this is Polybios. Also, just to complement what Alessio said, actually, here the process by establishing your budget is how to reach the objectives of the topic, meaning that you have to define your tasks and then to see the budget. Of course, the experts, they will assess the budget, but even if they see that you overestimate the amounts for requesting funding, more funding, in that sense, that doesn't really correspond to the activities, of course, the proposal will be penalized. So it's not only figures, but also the figures are connected with the tasks, and the tasks are connected on how to reach your objectives. So you have to make this connection very clear to the experts without overestimating the budget. However, there is an indication within the topic text in the JU contribution, the indicative contribution, that it says that we consider with this amount, the range of this amount, you can deliver this task in order to reach the objective of the topic text. If you want to go either less or more, you really need to justify. How you justify, of course, with the tasks that are linked to the objectives. This is how the evaluators will assess it. Thank you.
Great. Thank you very much, Polybios. And we'll address our next question, which is, will there be indirect costs applied also to the internally invoiced goods and services?
No. It's excluded from the flat rate calculation, the same as for subcontracting costs.
That's great. Thank you very much, Gael. And how do you define funding rate?
Well, it's automatic and it's set at 100% for all entities, even the ones that are not eligible for funding. So that's why it's a bit tricky in the tool. You may think that all entities can request the full reimbursement of their costs, but it's not the case, as I explained in the presentation.
And for this single stage call, within the beneficiaries requesting funding only, are included large companies?
Yeah, in single stage call, it's quite open. So you are eligible for receiving funding from the moment you are established in one of the member states, or in one of the associated countries, or in one of the low and middle income countries. So yes, large companies are eligible for funding in single stage call. It's not the case in two stage calls.
Thank you very much, Gael. I think we will address now questions related to the budget tool. So one of the comments was that in the budget tool example on the presentation that Gael just shows, there was a switch on the private member and contributing partners. And only from what Thomas understood, only contributing partners can be hybrid, and private members should not request EU contribution.
Oh, did I get this wrong?
Or did he get it wrong?
And I think that's the answer. I think Christoph got it wrong, or maybe I explained it wrongly, because private members and contributing partners, they can both be hybrid participants. So they can both, on one hand, bring contribution to the project, and on the other hand, requesting EU funding. So it's not only for contributing partners, it's also for private members, the hybrid type of participant.
Thank you very much, Gael. And another question. The budget tool instruction suggests that the US or Swiss ECOP doesn't count as non-EU ECOP. but on the presentation, the US and Swiss ECOP counts towards non-EU ECOP. Can you please clarify?
Well, it should then be like in the presentation. I'm a bit surprised of this comment. I think it's correctly reflected in the tool, but I will double check for sure. But well, so as I said in the presentation, ICOP from Swiss should be definitely non-EU ICOP, since Swiss it's not an associated country, and same for US, definitely. So I'll have a look straight away at that tool instructions and check if that's correct or not.
Thank you, Gael. And in the budget table, still referring to the budget tool, in the budget table for a large company, the column R, own resources, is a necessary condition for the company to participate.
So no, a large company can also have its cost covered by EU contribution or by financial contribution. It's not compulsory that its costs are covered with own resources, since theoretically that large company is also eligible for receiving funding. But then it's really a question of, if that company receives more funding, then there are less funding available for the others. So it's well, as I said, it's who gets what part of funding. It's really something that needs to be discussed among the different participants, but it's not a condition.
I also would like to complement what Gael just said for the budget table. It's very, very important that as an applicant, you use the budget tool first, because the budget in the submission module is designed in a way for which each cost category can be filled by each type of participant. I'll make an example. An SME not member of the four industry association can indicate ICOP. If you check the budget tool, that kind of field is not editable. So please work before in the budget tool, and then once you have done, put the data in the budget table of part A of the submission module.
Thank you very much, Alessio. And we have a question related to personal annual costs. So to calculate the personal annual costs, do you include taxes or only the gross wage cost?
So you can include any elements that are following the country legislation. So it really depends on the contract you have and the legislation in which you are, in the country where you are established. But it's quite broad. So yes, it can definitely include taxes. But again, for the personal cost, I would really advise to have a look at first the annotated model grant agreement, and secondly at that EC presentation that I've put in the slides.
And also to complement, wherever you have questions about taxes, all the fiscal aspects, please refer to the national contact point for Horizon Europe about administrative and financial matters. They will know exactly what to answer to you, which taxes apply, can be included in the budget, cannot, and so on, depending on the country.
Thank you very much, Alessio. So our next question is about the payments, and when can the payments be expected? Any upfront payments or only upon achieved milestones?
So you have a pre-financing payment made at the start of the project. Then you have a payment after each project period, and it's more or less, well, the report is always due 60 days after each period, and then there are 90 days to make the payment, more or less.
Thank you, Gael. And is there a minimum and maximum eligible budget?
What does this mean? Eligible budget for what?
It's in relation to the specific call topic.
I think it's related to the call topic.
Yeah. So I mean, I think Alessio and Plivius have already touched on this. So in the actual call topic text, it will identify what an amount that the IHI office considers appropriate to address the challenges in the call topic text. And then coming back to the earlier question that Gail had answered, it is possible, of course, to deviate from this, but the experts are always looking at, you know, is the amount that's actually requested appropriate for what's being described in the actual full proposal in terms of what's going to be achieved. So, I mean, I think the amount that's described in the call topic text is a good figure to aim for. But obviously then if a proposal is fully convinced that they need more or less money, that's fine. But it should be explained, it should be very, very clear to the independent experts who are going to think about this, you know, why those funds are needed and which amounts.
Thank you, Desmond. And can private members and contributing partners participate in several applications? So,
I mean, from a legal point of view and technically, yes. It may not be comfortable for a particular consortia if they know that their contributing partners are also engaged in other applicant consortia as well. So what I would say is legally and technically it's possible. However, just the self-regulating nature of consortia means that it's not very frequent. But, you know, I mean, single stages, which is what we're talking about here, is a more flexible construct by its very nature. So you could, I guess, have a contributing partner who's basically prepared to back various proposals in different ways, which would be coming under various topics. So yes, the short answer is yes, with a qualifier.
Thank you, Desmond. And if submitting a budget and submission tool, there's no requirement to split the budget between years nor between work packages and activities?
No, it's not like that. Maybe you are asking this question because you are relating also to the lump sum, which we don't have. That is applicable in some Horizon Europe calls. The budget tool, you put the tool for the project regardless the amount of work packages, regardless the duration.
Okay, so the next question, I think it was covered by Gael's presentation, but just ask her to give a quick explanation. So what is the difference between ICOP and IKAA? And can IKAA provide in-kind contribution? And is this matched with EU funding?
So the main difference between ICOP and IKAA, mainly I would say that ICOP are project activities, while IKAA are just additional activities. They are not project activities as such. They are not essential to the project, the additional activities. The ICOP, they can be reimbursed if the entity is eligible for receiving funding, while IKAA, since those are non-project eligible costs, those costs can also not be reimbursed. But I really suggest you have a look at the IKAA guidelines to have the full overview. I mean, and especially the different examples. Also to see the differences in the examples between ICOP and IKAA.
Thank you very much, Gael. And our next question is how a private non-profit research organization could be considered in an IHI project. Is it eligible for funding, but it must give financial contribution? Is this correct?
No. So I think, all right, if it's a private non-profit research organization, then let's just talk about the single stage that we're talking about now. So we would, as long as it's coming from the EU associated low middle income countries for the purposes of call 3, then it's eligible for funding, that's fine. If it's eligible for funding, it doesn't have any obligation to make a financial contribution, because a financial contribution by definition is going to someone else in the consortium. So if, as I said, you're EU based or associated or low middle income countries, then for the purposes of this conversation, you are eligible for funding just along with everyone else. You can receive funding in the project and you don't have an obligation then to bring anything on your part.
That's great. Thank you very much, Desmond. And our next question, can a private member or a contributing partner based in the US receive IHI funding in a hybrid model?
No, because US is not an associated country to Horizon Europe. So you need to have a look at the different conditions to to be eligible for funding. So in single stage call, as I said, the entities, they need to be to be eligible for funding. The entity needs to be established in one of the
EU or associated or low and middle income countries, basically.
that was very
that's
quickly
the
said. Yes. So US is not part of those countries, so no, it's not eligible for receiving funding.
Great. So I think this was our last question. I would like to remind everyone that both the presentations and the video recordings will be available at IHI's website. Another reminder that today the IHI Call 3 was released, so all the information is also on IHI website, and you can check all the documents there. Thank you very much for attending today's session, and we're looking forward to having you at the other sessions.